Hi, I'm Louis. Genting Plantations, one of the largest plantation counters in Malaysia. Is it worthy to be invested? Profit and dividend distribution. Between financial year 2012 to 2019, Genting Plantations' revenue was increasing with time. On the other hand, its profit before tax and profit after tax were fluctuating. In 2020 and 2021, due to decreasing production and rising demand, the palm oil prices were higher than usual. This led to elevated profits for the company. Likewise, it is shown in this figure that between financial year 2012 to 2021, Genting Plantations' earning per share was fluctuating. Within the last 10-year period, dividend distribution was consistent. However, the amount of dividend distributed was variable. In the last few years, Genting Plantations' dividend yield ranged between 0.5 to 4.5%. In financial year 2021, Genting Plantations' dividend yield was 4.5%, which was higher than FD rates. In the last few years, Genting Plantations' dividend payout ratio mostly ranged between 20 to 80% of the company's net profit. In 2013, the company distributed a special dividend, which led to an unusually high dividend payout ratio of 130%. Management efficiency. Between financial year 2012 to 2021, Genting Plantations' net profit margin was trending downwards, mostly ranged between 5 to 25%. In 2020 and 2021, as the company's profits increased, the net profit margin also improved accordingly. In recent years, Genting Plantations' return on assets and return on equity were fluctuating. Similarly, in 2020 and 2021, as the company was making more money, so both of the return on assets and return on equity improved accordingly. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Genting Plantation was on an upward trend. On the other hand, Genting Plantation's share price was fluctuating. It appears that Genting Plantation's share price is not directly linked to the assets value of the company. By comparing its share price and earnings trend, it is shown that there is no clear correlation between its earnings and share price as well. This shows that the share price is not significantly influenced by the company's earnings. By comparing palm oil prices and earnings trend, it is shown that there are some correlations between its earnings and share price. This shows that the company's earnings is influenced by palm oil prices to some extent. Price to book ratio is calculated by dividing share price with net tangible assets per share. Lower price to book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Genting Plantation's price to book ratio has been on a downward trend, indicating that its share price is becoming cheaper over time. Currently, the price to book ratio is at around 1.2 times, which shows that the share price is relatively low in this respect. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between the share price and the earnings of the company. If the ratio is very high, it shows that the share price is at the high point, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Genting Plantations mostly ranged between 15 to 70 times. In 2021, Genting Plantation's PE ratio was 14. This is a relatively low point compared to the last few years, showing the share price is comparatively cheap. The market cap is calculated by multiplying share price with the number of shares. Hence, higher share price will contribute to increasing market cap and overall valuation of the company. It is shown that from 2019 to 2021, Genting Plantation's market cap has been on a downward trend, indicating that investors are downgrading their valuation on the stock. By considering the number of shareholders holding the stock, it is shown that between 2012 to 2020, the number of Genting Plantations shareholders was decreasing with time. On the contrary, in 2021, the number of shareholders was increasing, which might be due to lowering share prices that attracted more interest from investors. Genting Plantations is also well supported by institutional investors. Its largest shareholder is Genting BERHAD, holding 54.4% of total shares, followed by EPF, Kumpulan Wang Persaraan, and so on, also holding significant quantities of shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Genting Plantations' capital expenditure spending has been increasing. These spending are mainly used for construction of new oil mills in Indonesia. Between financial year 2012 to 2021, it is shown that both of Genting Plantations' equity and debt level have been increasing over time. In the last few years, its equity to liability ratio was above or close to 1, indicating that its long-term debt is relatively low and its finances stable. Between financial year 2012 to 2021, it is shown that both of Genting Plantations' current asset and current liability have been increasing. In the last few years, its current ratio was above 1, indicating that the company's short-term debt level was relatively low and its finances stable. Between financial year 2012 to 2021, Genting Plantations' cash flow was between Rm 0.8 to 1.6 billion, a very large amount, indicating that the company's finance is on a stable footing. By considering its cash flow per share, it is shown that in financial year 2021, Genting Plantations' cash flow per share was Rm 1 ringgit and 80 cents, which is around 28% of the current share price. In conclusion, the earnings of plantation counters is frequently influenced by palm oil prices. Likewise, the share prices are also unstable, so it could be risky to invest in. However, palm oil is an important raw material for many food and household products, so the demand for crude palm oil is estimated to be consistent. Hence, even if share prices drop, they are likely to rise up again after some time. If shares were purchased at a lower price point, risk could be reduced and dividend yield increase. In recent years, Genting Plantations' dividend yield mostly ranged between 0.5 to 4.5%. Furthermore, Genting Plantations' market cap is large and its finances is stable. Its current PE ratio is at around 12 times. Do you think it is worthy to be invested in? Genting Plantations is a subsidiary under the Genting BERHAD parent company. Its main business activity is operating oil palm plantations. Currently, it has a total of 159,000 hectares of land planted in Malaysia and Indonesia, as well as 12 oil mills. Also, it is the fifth largest plantation counter in the Malaysia stock market. As shown in the figure, the majority of Genting Plantations' profits comes from its plantations operations, which makes up 87% of its total profits. The remaining profit is contributed by its property, downstream manufacturing, and others segments. As shown by the plantation statistics, it is shown that between financial year 2012 to 2021, Genting Plantations' fresh fruit bunches production has been on an upward trend. However, in 2020 to 2021, its production has decreased due to workers' shortage and adverse weather conditions. Figure shows that Genting Plantations' yield per mature hectare has been decreasing over time. This may be due to changing distribution of oil palm tree ages. Oil palm trees that are too young or too old tend to have lower production of fresh fruit bunches. As shown in the figure, the average selling price of crude palm oil and crude palm kernel oil tend to fluctuate over the years. This has significant effects on the profits of the company. In 2020 and 2021, there is a worldwide decrease of palm oil supply. Hence, selling price increased substantially. However, the recent loosening of movement restrictions means that workers' shortage could be overcome and production across all plantation counters will increase. The rise in supply could lead to decreasing selling price in the future. As shown in the figure, the total land area owned by Genting Plantations has been increasing over the years. Currently, about 65% of the land area has been planted with oil palm trees. Overall, the proportion of mature trees are increasing while the number of immature trees are decreasing over the years. That's all for today. Feel free to share your thoughts in the comment section. See you next time. Bye! The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis, as well as follow up latest update information before making any investment decisions.